presentation of TFNN. Live at TFNN, the Money Masters.
Let's go to Carlos in California. Hey, Carlos, what's going on?
I want to thank you guys for all that you do for TFNN. I've been a Tiger for over 10 years. Actually, I started listening to you before I even speak a word of English.
Oh, really?
And the thing that captivated me was when you make like, rawr. I was like, wow, what is that?
That is so cool. And where are you from?
I didn't take it serious. I'm from the south, actually the northwest part of Mexico.
I love
right
it.
next to Guayabitos.
Okay.
It's close to Puerto Vallarta.
Okay, cool.
Yes, and I listen from there, and then when I arrived here, I married my wife, and then I keep listening to your radio station.
That's a beautiful thing,
man. It's such a great thing.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. This is Tom O'Brien. I got my partner, Steve Rhodes, right here, growling and prowling. We happen to be in beautiful Denver, Colorado. I want to thank all the Tigers and Tigresses for coming out to the workshop last night. Market-wise, we have happening. Get the Dow up 14, Nasdaq's down 4, S&Ps are off a couple bucks. Gold's off 460, silver's down 38. Platinum is, oh, look at this. Platinum's catching up fast. Platinum's up 29. You're at 17.15. That differential just went from in the last month and a half, from a $1.50 differential to $40. There you go. Copper's up to down 2 pennies at 3.81. We get the bonds up 10 ticks. King Dollar is on the move out here. It is up 26 ticks, trading at 79.40. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? Let's go over to King Dollar and see what's happening. Okay, so what we have with King Dollar is this. She got up and had a nice sign of strength on the 16th. 16th, we got up to a price point of 80.24. What we did last Thursday and Friday, you backed down with lighter volume. You know, we got to that high up there with 35,000 contracts. We backed down with 5,500 contracts and 23,000. You know, she's going to make a run for that 80.24, number one. Now, the real key is going to be how does she come into that? Because once you're over that, well, the 80.24 is basically saying you want to go to 82. You know, so we'll see how she runs into that whole area. You go over to Europe. What we have with Europe, really still flat market out there. The DAX, though, which has been leading up, down, and all around, the DAX is down 0.8%. Not that that's a big deal. It's not. Now, our markets, okay? Let's go over to Walmart first. What we have with Walmart is this. Walmart yesterday came off the high with juice, big-time juice, too. Now, when you take Walmart, folks, in, you know, we've been watching it for a long time because my take on Walmart was that if, in fact, it could break that high that has been consolidating out there for basically 15 years, then basically it would be pretty hard to be right on the assumption that we're going to go to lower prices. Bottom line, it broke lower with volume, and when you actually look at Walmart, I mean, it's been sticking out like a sore thumb that your juice, the volume, was still downtown. You know, what we had out here, you can go bring that all the way back to 1999, and the reality is that you have 3 lower highs. Then what you have, and that's the thing that's sticking out, was that on October of 2008, that little baby had monster volume, and so check this out. This is what's really wild. The stock had gone from $60.30 down to $47 in 1 month. You know, so it took some heat, $13 in a month for Walmart, right? Bottom line, that's where Walmart's going to head now because you got under $60.30. That's where the baby's going to head for the bottom of its consolidation. Now, inside some of the high-volume stocks today, this is what we have happening. Not that we have high volume, period. We get Apple down 350. We'll see whether they wait till the end and jam that baby higher again. Dell's off $1.06. We have Brocade is up 24 cents. You got Gilead, that's back down again, another 54 cents today. Chico's is up $1.54. That's a stock that's absolutely got decimated, though. You have GM down 4 cents. We get, Marvell is off 8 cents. Caterpillar is up $1. ExxonMobil's up 29 cents. Hewlett Packard's down 40 cents. Now, Hewlett Packard's is going to be coming out with numbers today. Steve was just talking about Cheesecake Factory. Cheesecake Factory, folks, is not only down, you have juice coming underneath it, and Cheesecake Factory on a weekly basis was a beautiful Tiger Gottlieb that was set up. In fact, there's many Tiger Gottliebs that are set up kind of on a weekly basis all over the marketplace. Right now what we have, let's see what we got going. So the Dow's up 3, the Nasdaq's flat, and let's go over to Apple. We take a look at Apple. So yesterday what you had is this. The last 35 minutes, Apple went up $8. Huge, last hour. Went from 506 all the way up to 514. You know, we're under the 511. 511 on a intraday basis is important to keep your eye on. The reason being is that there was some juice at 511, meaning on the way back up. I suspect Apple's going to try to trade right down to 507 right now. We'll see what kind of juice we get as we come into that area. We go over and we take a look at the gold contract. Gold yesterday had some nice juice topside, and what we have out here today is this. We hit 1761. Now this is kind of a bummer actually, because I would have rather it hit 1765 with juice. And what we have now is that you hit the 1761 without the juice. You know, we got plenty of time to get it going. Yesterday what we did is that we had 202,000 contracts. If it stays up at 200,000 contracts, that'll be great. The reason being is that we did get over that 1761 area, but what we had is that we gave it up. So you want to make sure that how you're into that area, we stay into that area with volume. That's the essence of the whole deal. Taxes. Okay, today what we're going to see out here. We'll see where they're going to go with corporate taxes. We'll see what the president's going to come out with Gettner. It's all over the press today that there's going to be a new tax bill out there. Well, bottom line, we'll see what it is, how it's going to affect things. Something that you absolutely would affect the marketplace is if they are going after dividends. There's nothing in there that I see just yet that they're saying they're going after dividends. But you got to remember something. You're going after dividends. That will affect the dividend stocks ASAP. Because the bottom line is that it's nice when you're paying a smaller tax fee on the dividends. Fannie Mae and Freddie Mac. Bottom line is that their legal fees are accelerating in a big way, and most of their legal fees are basically paying for the executives in security fraud cases. And what is still amazing is that most of those, let's see, so this is in the front page of the New York Times, the business. They've paid $37 million for 3 Fannie Mae executives accused of securities fraud. The best thing that these guys get going for them, so check this out. You pay $37 billion, but you say you did nothing wrong. If that's not over the top, nothing's over the top. But it just shows what money does. If the folks that didn't have any money, let me tell you something, they put them right in the can. No doubt about it. $37 million can buy a way out of quite a bit. We take a look at the market, and the reality is that you got another flat market out here. It's going to be like, okay, what is going to be the catalyst of this market, either taking it up or taking it down? When we were talking yesterday, last night actually at the workshop, this is a great place to put trades on. The reason being, folks, is that if you're going to break topside, you're going to break topside in a big amount. My take, of course, we're going to break downtown. That'll be a big amount. we've been trading sideways here, and we've been trading sideways for, approximately 3.5, 4 weeks. You can actually make the case you've been trading sideways up 30 points for almost 6.5 weeks. 877-927-6648. Let's go. I need this. It's always a little challenging on the road, particularly when you're losing your internet connection, which I just did. Gold market. So the gold market yesterday, this is what you have at the gold market. The actual metal had good acceleration, wide price spread, had conviction. The equities still have not. And that divergence you want to see straightened out. Today's going to be a big day because of the way that we went over the high of yesterday. And what you want to do is that you want to stay pretty close to that high, and we want to see about 190, 200,000 contracts come in. If you get that going, that's saying that the gold contract wants to get up to that 1765 area. And how we get into that area is going to be crucial because that's coming into the supply line that was left over from the downdraft in September. And that downdraft in September, you talk about volume. That had some monster volume. We came down there with 245,000 contracts. The aspect of those 245,000 contracts, it's been having a hard time getting through that area, and now we're pushing on 6 months. What I expect we're going to see is that you're going to see it fail at these areas once again, come down to the bottom of the consolidation that we're in, and I suspect that is going to actually be the buy. And what is amazing right now is that time-wise where we're going. I mean, it's what we're coming into March, and what does happen is that I've seen many times the real moves, some really powerful moves, come inside the gold market, the equity market, the gold equity market per se, and those moves come in, in the spring. I've seen it enough times. So if the setup is there, coming down the other side with lighter volume, you get the price of gold coming down to the other side of the consolidation that we're in. I think that's going to be some real action. Right now we have the Dow up 10, S&P's a flat, NASDAQ is up 1.5. Apple's still down $3, and it's going to be all about Apple. It's not only all about Apple because of the NDX, it's all about Apple because of the fact that the inside the S&P, that's also a big deal. You stay right there, folks. It's Tom O'Brien. It's the TFNN. We'll come right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investment Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Tom O'Brien. And, folks, if you happen to be in Spokane, Washington, or San Francisco, come visit Steve and I. We're going to be leaving... Actually, as soon as this program is over this morning, we're going to be going to Spokane. We'll be there tonight from 6:30 to 9:30. You can sign up right in the front page of TFNN. We're going to be in San Francisco on Thursday night, 6:30 to 9:30. Now, what's on the agenda again, folks, okay, and this is going to be wild to watch how this plays out. So, Greece, what we had with Greece is this. If you remember, you have all this debt, number one. Now, the original bond scenario in Greece had to do with, okay, they can't pay their bills, number one. And number two, there's plenty of insurance that was put out on the credit default swaps. Now, the European Central Bank and the banks themselves thought they were going to get away with a voluntary give-up of 50%, 60%, 70%, whatever that number was. And you can imagine, if you had bought insurance on that aspect, well, bottom line, you would not get paid for it because the Derivatives Association, who, by the way, is owned by the banks, decided that, well, no, we're going to make this a voluntary one. Now, the reason for that is that because the banks themselves are on the hook for many of these credit default swaps. So now, we're going to fast forward to last 24 hours. What you have happening now is this, is that it doesn't look like the bailout is going to be voluntary. There is plenty of bondholders that are saying, you know what, I'm not going for this. Now, the way that it would work structurally is this, is that the Greek government can, inside the bonds that are out there right now, and this has to do with, folks, what law the debt structure is under. And right now, the bonds that are out there are under Greek law versus the new bonds that are going to get issued under British law. So watch how this goes. If enough of the debt holders don't voluntarily swap the bonds for the new bonds, they will put a law through basically driving it down their throat. As soon as that happens, that is a default under a credit default swap. Now, as soon as that happens, if in fact that happens, what do you think is going to happen? Bottom line, this is where folks, and I'm talking about banks that have been sitting on the sideline saying, hey, we have no exposure. You're going to find out exactly how much exposure is actually out there. Now, you're not going to find out overnight. What you're going to find out is that there'll be always someone that knows, and you'll see the selling inside of those institutions, and you'll see them pretty quick. Because it's a big number. This is not a small number, and this is not going to go away. And the European Central Union themselves, the way they had thought that this could happen, they were so insane that they thought that they could actually make money on the deal. They had bought themselves a huge amount of bonds. Those bonds they bought at less than par. They had made money on them. Now they're giving that profit up, which totally makes sense. But I expect what you are going to see out here is that when this comes across, there's going to be folks that are holding the bag, and holding the bag in a big way. And the amazing part about it is that what you actually also have is these credit default swaps actually had come down quite a bit because of the fact that they thought this would be an orderly, voluntary default. And the closer that this gets, the more that it's saying, it's not going to be a voluntary default. Now, you got to remember, even with the bailout, the first switch date is March 20th. It looks like they're going to have enough money for that. But in order to pull that whole deal off, there has to be a swapping out of the bonds for the new bonds. And what the new bonds are going to be doing is that there's going to be different restrictions on them. There's long payouts on them. I mean, it'll take for quite a while for them to come up with anything. That's the bottom line. (877-927-6648). And folks, I do apologize, but let me see him. Okay. This is not easy. I'll tell you. You stay right there, folks. We're coming right back.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. TFNN has an exciting announcement. As part of our Go Long America contest, Tom O'Brien and Steve Rhodes will be hosting 4 live in-person workshops that are absolutely free to attend. Denver on February 21st, Spokane on February 22nd, San Francisco on February 23rd, all from 6:30 till 9:30 in the evening, followed up by Boston on Saturday morning, March 3rd. Steve Rhodes will show you how to understand the power of 1% and how to master probability, along with avoiding getting stopped out of trades early, while Tom O'Brien will speak about the intense trading power of Tiger Gartley and butterfly patterns. All of these workshops are completely free to attend. Come see Tom O'Brien and Steve Rhodes live at one of these free workshops as part of the Go Long America Tour. For more information and to reserve your seat today, visit the front page of TFNN.com and click on the Go Long America Tour banner. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. This is the other half of the Money Master, Steve Rhodes. We have run into just a couple of technical difficulties, so we got the tag team going, and I'm going to step in and fill in for the rest of the show. You can join us on Tiger TV. You can catch the charts here on the screen. Just go to the homepage of TFNN.com, click on Tiger TV. You can watch the show live, and the chart that I've got up on my screen here right now is the SPY chart. And what the SPYs are doing, folks, they are trading inside the swing point from May 2nd. Your spread on that is 135.95. That's the low. The high of 137.18. He did 126 million shares inside that swing point. So 126 million shares. Let's go take a look and see what were the SPYs doing yesterday. Well, the SPYs actually traded out yesterday. You did 133 million. So it's coming into that swing point with some volume, if you will, right? The high yesterday got to 137.05. Still didn't get over the highs from yesterday, so we've got kind of a draw, if you will, a stalemate, because 137.18 is the high there. So even that, you're 5 pennies away. What you really want to be able to see is you want to be able to see a test of that high, or in this case here, let's just say the bullish side would be to stop before that swing point, maybe back off. Maybe back off. You'd love to be able to see it back off because, the overall market doesn't have the energy to get up. In this case here, what you're looking for is to, will the SPYs close below the low for May 2nd? Well, the low for May 2nd is 135.95. You're trading out right now 136.20. What did it get down to this morning? It was not able to get to 135.95. It got down to a low of 136.07. Volume-wise right now, you've done 41 million shares in the first hour or so in trading. So you've got some volume at this stage. That is inside the SPYs. If we go try to dig down, let's go take a look inside the SPYs here on a 10-minute chart. Give me a minute to just pop that up on the screen, and we'll take a look at the SPYs. That's what I'm going to punch up here right now. Let's see if we've got any volume. Well, you can see you had a spike low down at 10:10 a.m., spiked down with 9.9 million shares, got down to a low on the SPY in the 136.07 area. What was that coming against? Well, that was coming against, just understanding volume, understanding swing points. That was coming against the area at 4 p.m. on February the 16th. You did 10 million shares. Look at how that stopped out. Let me draw the line here. Let me pull up that tool. Maybe it's a little bit easier for you to see. So you're just going to come to a high volume bar out here, take that line tool, draw it straight across, if you will, and notice how that buyer at that stage, going into that 4 o'clock session on February 16th, has held, and look, I don't know if it's just one buyer, if you will, but there is a fish, there's a whale that's inside this, and that whale is still there. It looks like to me like it is still there, hasn't let loose, because that is holding up this area. You can see here how that has acted as a support area. Where else would you be looking at if you go back even a little bit further? Let's say that area breaks. Well, that area breaks. Go back and just simply take a look at the next volume bars that are out there. You can see that you've got really two of them. The next one would be right here, going into the 4 p.m. close on Valentine's Day, February 14th. If we take our line tool, we draw that. Going into the close, what you're looking at there, folks, you're looking at a price point of 135.27. You can see right now you're trading out at 136.14. Now let's go take a look at let's put some Fibonacci numbers to this and see if we've got things tying out to each other. We'll put up the fib levels. I'm just simply going to come down here from that February 14th area all the way up to the high made in the SPY here on February 21st. That was yesterday. I believe that was yesterday. Yeah, that was yesterday. And what you're going to see, the 0.618 area, you got to love how what you've got coming together here is you've got price, you've got some time, if you will, if you're taking a look at mathematical retracement area, the 618 area, 135.33. And where did I say that high volume bar was? The top there was 135.71. So that is the next logical place to see the SPY pull down into. If it does pull down in there and it's pulling down with more than 8.2 million shares, then you've got some selling that's going on. Otherwise, that would be, your next area of support. And is there an ABC going down there? Well, let's go ahead and put our formation tool up on the screen. Let's start from the high yesterday in the SPY at 137.05. Let's come down to the low that was made at 3 p.m. yesterday on the 21st. Let's go up to the high made intraday so far this morning at 10:20. A 1-to-1 A to B equals C to D, and we know that it's likely more than the 1-to-1 A to B equals C to D. Why? Because it looks to me like it is less than a 0.618 retracement off the top. Let's come here. Let's take a look at that. Let's take a look at that retracement. That retracement just above a 0.382. You can see that when you only do a 0.382 retracement. If you can bust through this area here, and that would be busting through the 3 p.m. area from yesterday, 3.2 million shares. You're going to want to keep an eye on that as well, because that would in essence be the swing point on this 10-minute chart. I believe it's a 10-minute chart. Yeah, 10-minute chart, SPY chart that I've got up on my screen. So more than the 1-to-1 A to B equals C to D. How about take a look at the 1 to 1.272? Well, let's just go ahead and erase a little bit of this data off here. Let's get rid of these fib numbers. Let's get rid of the last one that I put in there. That's clean. There we go. That's a little bit clean. Let's get rid of this volume bar. What you can see here, folks, is you can see a 1 to 1.272 takes you to 135.27. Takes you right where the 0.618 area takes you right where you have a high volume support area. And so if if you're an intraday trader, that's what I would be looking at. Why? Because that would be setting up a Gartley buy pattern. Now, you can see this A to B leg here. Right now, you can see you're trading inside it. You're trading, when I say inside, I mean on the left side. You see the angle that I use on the A to B is the same angle used on the C to D. It's really important to understand that, because when you are trading, in this case here on the way down, on the inside of that, it's saying you've got some energy. You've got a little bit of conviction, if you will, and that there is also suggesting to us that it would be more than a 1-to-1 A to B equals CD down. That is on the SPYs. Let's go take a look at the small caps out here. Let's look at the, where are the small caps? Okay, here we go. Let's take a look at the 10-minute chart on the small caps. Let me just kind of clean my screen out here on the small caps. You had, let's see here, you had a push-up at 4 o'clock yesterday, 3.9 million shares. The low at that stage was at 82.10. You're trading at 82.05 right now. Small caps, looks like they completed an A to B equals CD down yesterday. Let's go take a look at that. That's off of a high going back to February 17th. High there of 83.30. Where I'd make my B point, again, this is a 10-minute chart, folks. I would be coming down into the swing point of 10 a.m. on February 21st. That was yesterday. Your C point would be at 11:10 a.m. on the 21st. The 1-to-1 A to B equals C to D, which it completed this morning. In fact, it completed a 1-to-1.272. Now, remember when I was taking a look at the SPYs and talking about looking at the C to D leg, look at how here you started to come inside it. When you came inside on the left-hand side, intraday, and it works this way, folks, whether it's an intraday chart, a daily chart, a weekly chart, monthly chart, you want to be paying attention to that C to D leg, because the A to B, that's giving your first piece of information. If you're going to go ahead and trade a retracement, maybe a 618, a 786 retracement, then you're going to be taking a look at that expansion on that C to D leg. In this case here on the downside, as you can see, as you came in on the left-hand side, that says to me you're going to do a 1-to-1.272. Well, a 1-to-1.272 would have taken you to $81.85. Where does the IWM get to at 3 p.m. yesterday? Get you to 81.83. 2 pennies away. How does that stuff work, folks? Oh, man. It works because you just, these patterns, they repeat themselves. Right now, all it's been able to do, once you do more than once you complete your ABC, you're going to do something else, right? In this case here, all you're doing is just going sideways, building a little cause. In this case here, it looks to me like the cause building that it's doing is really just trying to cause to be able to get a little bit lower here. If we take a look at the retracement off that C to D leg, folks, and we go all the way down from where that started, what you'll see is all that it's been able to retrace is to a .382 area, that 382, 82.29. And so now that could be setting up the next A to B CD leg. Where would that take us? Well, we can draw that in here. You would start right here at 11:10 a.m. on the 21st, the high there, 83.04, all the way down to the low that was put in here at 3 p.m. yesterday, and we'd come to the highest point that was made at 10:20 this morning. Let's take a look at, let me try to shorten this up here. So a 1-to-1. In fact, I'm going to clean this up for you. Be a little bit easier for you to take a look at on Tiger TV. So let's get rid of that first formation, that first Fibonacci that we've got here. So now let's take a look at the next A to B equals CD leg on the 10-minute chart that could be setting up. That would take you to 81.15. Now, look at this. We're in the CD leg here. You're going to want to be paying attention to, are you going to start trading inside this area? And what you're going to be paying attention to is the B point, right? 3 p.m., 1.2 million shares. You're trading inside there right now. You want to be able to bust that with volume, with conviction. And right now in the last 10-minute session at 10:40, you didn't have that. You did 793,000 shares. So right now it hasn't gotten back down there, building a little cause, building a little energy to try to bust through, and that is on the small cap. So let's come back. Where does the 81.15 take us to? Well, now, folks, that makes all the sense in the world. That's going to take you right here to 100% move of a move. That's going to take you to the 340 time period on February the 15th. That would be the next logical place where you would expect to see some type of support. That is on the IWM area here, folks. And we got, we thought we had a caller on the line. There's just a lot of activity on my screen here. So on the IWM, if you will, look for that 81.15. At 81.15, you're going to get into the swing point, the 1-to-1, 100% move of a move swing point at 3:40 in the afternoon, February 15th, only 1.2 million shares. So as this A to B equals CD is being made, if you're coming in that swing point with more than 1.2 million shares, it's really telling you that what it wants to do is it wants to go a little bit lower. It wants to do like a 1-to-1.2 1.272. That would take you to $80.82. So you're going to have two things to look at here. You're going to have the volume as you're coming into the swing point on the 10-minute chart at 1540. You're going to have the angle. You're going to have is the C to D leg on the left-hand side of this formation, or is it on the right-hand side? If you're on the left-hand side, you've got more energy, just kind of like the energy that we've got here at TFNN, the type of energy that we're going to bring to Spokane tonight and San Francisco on Thursday, and then to Boston on March the 3rd. And we're looking so forward to seeing everybody. It was actually such a great experience just to be able to spend time with our clients. I mean, that was really just a blast. Had just such a great time. So we're looking forward to seeing you as well. If you're anywhere in those areas, come on out, see us. We're going to teach you a ton. I mean a ton. Hey, value-wise, if I were going to try to put a price tag on it, it's thousands of dollars of actual education, training, life experience stuff that you absolutely need in order to become a better trader and a better business, a business entrepreneur, parent, whatever it is. So come join us. You got the Dow down right now, 18 points, Composite off 10, small S&P off 3, Russell 2000 down a couple, Apple down $3, Google down $2, Microsoft down 3, Intel off 27 cents. Fire still on fire. That is up a good $8 right now. Let's go back, and we were taking a look at this stock symbol earlier in the 9 o'clock show when I kicked things off for us. Let's go back and pull that up if I can find that. Here we go. We had the weekly chart, and on the weekly chart, we were taking a look at ABCs. We were saying that this thing here, because of, let me get rid of the, clear this up on the screen here for you real quickly. Let's get rid of the retracement patterns. And in this case here, because you blasted through the B point with volume and the conviction you had today, it looks like you want to do a 1 to 1.272, A to B equals C to D. 45.05 is that price target. Where has it gotten up to so far today? It's gotten up to 44.73. This is a interesting looking stock. I think you want to have this on your radar screen, if you will. You want your radar screen. You're going to take a look at that October 29th area. Look at the high of 32.79. If you can see a nice pullback. This is the weekly chart that we're looking at here on the screen. If I punch over to the daily chart, you're going to see some conviction here with this gap up. At least, yeah, look at that volume. Look at that volume there, folks. You're looking at a nice breakout, 2.4 million shares on that. But wait to buy this thing as it comes back and either test the gap or it gets all the way back to this really high volume bar that you've got out here from the October 28th time frame. You talk about putting that on the radar screen. Let's go take a look at Garmin as well. Garmin is trading. That was gapping up this morning. And Garmin, I had the weekly chart. Let's go pull back on the daily chart. Take a look at the GRMN, folks. You've got that breaking out on volume. I believe it was their third or fourth quarter results or their outlook, their forecast. You've had 3.9 million shares in the, let's see here, an hour and 28 minutes or so into the trading session. So this thing has broken out with some nice conviction here. Not a bad-looking setup. Let's go take a look at the weekly chart again on this, see what kind of ABC pattern that Garmin is trying to complete. Our A point on this, I would go all the way back to the November 21st, 2008. Again, we're looking at the weekly chart below there, 1440. I'd go all the way up to the high on March 26th, the high there, 4101. Come all the way back down to the low on August the 27th. We'd be looking at $26.11. Now, let's go take a look and see how this thing, Garmin here, how it went past the B point. We take a look at the volume here real quickly here before we go to commercial break. The volume on that B point to see how we cross this. Did we cross it with volume? We did not cross this baby with volume. 877-927-6648. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The other half of the Money Masters, Steve Rhodes here with you for the next last 4 minutes or so. 877-927-6648, and absolutely stay tuned. Great show. Coming up next, Basil Chapman. We're going to go ride the Chapman Wave, and then we're going to go out to Tucson, Arizona, and Larry Pesavento. I think that Basil's going to hit Larry over to third base, and then Larry is going to steal home. And then 3 to 4, you got David White. And, folks, what I've got up on my screen here, if you're watching us on Tiger TV, I've got the XLF. We're taking a look at the financials. Beautiful-looking chart. When you're looking for chart patterns out here, you can see you've got a Tiger Gartley. You know, when Tom was on, he was talking about there's Tiger Gartleys all over the place. And, you know, that says something, folks. And when you're taking a look at the Tiger Gartleys, here's the the issue that you have to contend with. That issue is that a Tiger Gartley getting up over the B point on the financials. You're looking at October 27th, 232 million shares. You got up over that on lighter volume. Now, when you get up over a swing point like that on lighter volume, when you start taking a look at the retracement coming back, you're taking a look at that first level of support now being that October 27th area. So in the XLF, you're looking at 14.17. You're trading out at 14.68 right now, but you do have this nice 1.272 expansion off that October 27th area. That's from the high, that 14.17, all the way down to the low that was put in on the day after Thanksgiving. You have a nice 1.272 expansion off that. You've got a 618 retracement off of the highs back in February of 2011. Now, on the financials, and much like you see when you're taking a look at the ETFs, whether it's the diamonds, the SPYs, the Qs, the small caps, if you will, February 3rd, folks, when the employment report came out and said things were just absolutely wonderful, if you will, you had the markets gap up, you had the XLF gap up. It closed out on February 2nd. It closed at 14.35, got up to a high of 14.41 on that session, 53 million shares. It gaps up the following day on 86 million shares. So it does have some conviction. You want to be able to mark that 86 million. You want to be able to understand what it gapped up on. You want to understand as it's coming back into February 2nd, which has 53 million. How is it handling that area? Well, you can see here the first time down, it was on February 14th, 80 million shares. A little bit of conviction. You had 80 going against 86, but really 80 going against 53. It still couldn't get down and close that gap because the low on February 14th, folks, the low was only 14.42. And remember the top of that gap, 14.41. Being off by 1 penny. That was important. What's it do the next trading session? Just sideways move, 75 million shares. How about after that? After that, you do another 77 million shares. Nothing here but sideways action. Now, yesterday, this is kind of interesting because you're taking a look at the high put in on February 19th. 1486, 77 million shares. 1486. Let's remember that number. What do you do yesterday? You get up to 1487, 1 penny over it. Close below it on lighter volume. 63 million shares versus 77 million shares. That says, hey, my work to the upside is done for right now. What does the XLF do? It trades off that, trading down a bit, 1467 or so. Still right here, not enough juice to go in either direction. Pretty amazing, folks, absolutely amazing. But nothing more amazing than you being here. Hang out with us. Stay tuned for Basil Chapman. He's coming up next. We're going to really look forward to seeing folks in Spokane, then in San Francisco, and another great party. Tom and I will be leaving here in just a few minutes, heading to the airport. We want to say thank you, Denver, for just such a great, hospitable time, and we look forward to getting back here and seeing you very soon. I absolutely do. So, folks, stay tuned. Have a great day, and take care. Bye-bye now.